Life would be a whole lot easier if someone would just Zelle us $1 million. But unfortunately, the chances of that happening, well, probably zero. So let's look at some of the ways to turn $10,000 into $100,000. Welcome to Buy or Buy. ETFs, or exchange-traded funds, are exactly as the name implies, funds that trade on exchanges, generally tracking a specific index fund. When you invest in an ETF, you get a bundle of assets you can buy and sell during market hours, potentially lowering your risk and exposure while helping to diversify your portfolio. Bond ETFs are generally considered less risky than stock ETFs or mutual funds, as they invest in fixed income securities that have a fixed maturity date and a set interest rate. Stock ETFs, however, are subject to more market volatility and can experience significant price fluctuations. If there's an area where bond ETFs have drawbacks, it could be in their expense ratio, those fees that investors pay for the manager to handle the fund. And that expense can eat up a sizable portion of the interest generated by the holdings, turning an already small yield into a minuscule one with potential low returns. But bond ETFs really can provide a lot of value for investors, allowing you to quickly diversify a portfolio by buying just one or two securities. The decision on whether to purchase a bond fund versus bond ETF usually depends on the investment objective of the investor. If you want active management, bond mutual funds offer more choices. If you plan to buy and sell more frequently, bond ETFs are a good choice. If interest rates turn against you, the wrong kind of bond fund may decline a lot. For example, long-term fund will hurt more by rising interest rates than short-term. Interest rate changes are the primary culprit when bond ETFs lose value. As interest rates rise, the prices of existing bonds fall, which impacts the value of the ETFs holding those assets. In closing, ETFs are a bundle of assets and securities such as different stocks and bonds. A single ETF can contain dozens or hundreds of different stocks or bonds or almost anything else considered as an investable asset. Bond ETFs can offer competitive long-term returns regardless of movements of the stock market and can offer steady income to the investor with very low costs.